In today's video, I will show you how to grow a dividend growth portfolio with just a $100 monthly contribution. Unlike most other videos where they explain how to do this when they already have a 100, 200 or 300k portfolio, I'm right there with you as I'm in the middle of this process as well. Like you, at the moment I only have a small portion of my income available to invest as well. Hi there and welcome back to my channel. This is Tom from the Dividend Attitude. Today is a bit of a different episode than the last few episodes, because in this video I will show you the ins and outs of my portfolio. The value of my portfolio, which stocks I own and how much dividends I make. Stick around until the end because I will show you exactly how I got to where I am right now, how I plan on moving forward, and how you can do the same with just $100 a month to start with. As a dividend growth investor, my portfolio is mainly centered around dividend paying stocks that have paid and increased their dividends for at least 5 years, and the longer the better. Good dividend growth stocks give you a raise that you don't have to work for every year. Before I show you how I got to where I am now, I'll show you the actual end result first. And yes, this will be considered a small portfolio for some of you watching, but I think it will also inspire people who just got started or even have to start still. My portfolio value now stands a little bit under $10,000 and has been over $10,000 before the current crisis already. Even though my focus is on the passive income side, I won't lie, hitting an intermediate goal like 10,000 is also exciting for me. Looking at my account in Bing Bank, you can see the trend in portfolio value from the start in 2017 here. This is a graph of my return of this portfolio. What do you notice here? I did not have a positive return until after about 14 months. This is excluding dividends, but still. Important to take away from this is that as long as you focus on quality, profitable dividend companies, the returns will come over the longer term. If you want to see how my portfolio was performing during this year, for the first 20 or so episodes I did a quick review in each episode. In the very first episode I did quite an extensive overview of my portfolio at that time as well. So if you would like to see more of my journey in detail, you can click on the playlist now suggested in the top right corner. As I'm a dividend investor that prefers to buy undervalued stocks, it can take a while before the narrative of an undervalued company turns around, so be patient. As long as the long-term thesis stays intact, you're good. That is why I focus on my dividends coming in and increasing that. Because you know what, during that first year, until May 2018, I made $121 in dividends. For not doing anything, just holding those stocks. How amazing is that? Since the start of this portfolio in 2017, I'm now up over 14% including dividends. Excluding dividends, the return stands at 5%, so slightly positive. If you liked the video so far, don't forget to smash that like button and make it turn blue. It greatly helps to get my content out to more people. Also, if you haven't done so, don't forget to subscribe to stay updated on future content. I post a new video every Friday. So how about those dividends, Tom? Well, the total I made in dividends so far is $821 since the start of my portfolio. Again, I didn't have to do anything else but to hold those companies. Let's look at some increases I got in the meanwhile. T.Rowe Price. In 2018 they increased their dividends with 22.8%. In 2019, they increased their dividends with 8.6%, and in 2020, they increased their dividends with 18.4%. For the time I've been holding T.Rowe Price, the dividends have increased from 50 cents to 90 cents per share, or an almost 58% increase. Where do you get a 58% increase in 3 years without lifting a finger? Sonoma, WSM. In 2018, they increased their dividends with 10%. In 2019, they increased their dividends with 11.6%. Due to the uncertainty, no increase yet in 2020. But again, the dividends went from 39 cents to 48 cents per share, or a 23% increase. Another one, VF Corp, or VFC. In 2017, a 9.5% increase. In 2018, a 10.9% increase. In 2019, a 11.6% increase. VF Corp has spun some of its business off in 2019 though, so that is a bit hard to compare. Of course, there are also some slower growing companies. Johnson&Johnson. In 2018 they increased their dividends with 7.1%. In 2019 they had a 5.6% increase, and in 2020, in the midst of this crisis, they increased their dividends with 6.3%. The organic dividend growth from 2017 to 2020 is an increase in dividends of 19.8%. So with 6.6% annually, that is above my target of at least 5% dividend growth per year. The total amount of annual dividends went from $76 per year in 2017 to a forecasted $380 in 2020, based on half-year numbers. That is a 400% increase in passive income. Yes, in the beginning I did add quite a bit of money, But after that initial period, there was a period where I was not putting in any fresh money. So imagine what would have happened if I kept automatically transferring at least €100 or about $114 per month. Let me also highlight some of my holdings and when I bought them. VF Corp. This is an apparel company with brands like The North Face, Timberland, Vans and Eastpak. I bought 6 shares around $55 per share in 2017. And CVS Health Corporation. This company provides health services and plans in the US and is one of the largest pharmacy chains, if not the largest, in the US. I bought them right before the Aetna acquisition was announced around $76.50. So I never got an increase in dividends from CVS so far and I've been in the red almost since I bought them. But I hold on to the company because I think it will return to a healthy dividend grower once the debt is paid down from that acquisition. And then Tanger Factory Outlets, or SKT. This is an outlet REIT and it is by far the worst performing company in my portfolio. I bought in a bit under $16, so I am down well over 50% on this one. Unfortunately, they have also temporarily halted the dividends. For now I plan on holding, but depending on how the situation develops I might sell this one. And then 3M, well known for its post-its, but this is an absolute massive industrial company with a very wide range of products. I used this company in quite some analysis videos, so if you want to know more about the company, then I strongly suggest you to watch episode 9 for example. Now suggested in the top right corner. This is my most recent purchase and I bought 3 shares twice for an average price of about $143. And then Qualcomm. This company provides technology for much of the digital communication we have today and stands to benefit from the rise of 5G. This one is a holding that I had to be very patient with. I purchased 6 shares at the end of May 2017. Although it went above my purchase price of about $55 a few times, it took until April 2019, so almost 2 years, before it remained in the green. Right now it is my second biggest winner. Again, focus on the long term. So how did I get to where I am right now? Stick around because I will give you the exact steps so you can do the same with just $100 per month to start with. I started with an initial deposit of €1,500, so about $1,700, and I invested that into 5 companies. After that I deposited another $1,700 and invested that into 4 other companies. In today's no broker fee environment, also in Europe we can finally make use of that with trading 212, I would probably have bought a few more companies. And that takes me to the point of getting your finances in order first and to make investing an integrated part of your finances. Before you even think about investing, you should have your personal finances in order. In the episode Pay Off Your Debt or Invest, now suggested in the top right corner, I explained the pros and cons of paying off your debt first versus investing first and why I'm using a hybrid approach. So make sure to map out all your expenses and income first, create a budget and then decide how much you can comfortably allocate to invest in the stock market. Please be realistic about this. When I first started in 2017, I was so excited that I allocated a rather large portion of my income to invest in the stock market. But what ended up happening is that I had to withdraw some of the deposits I made, thereby completely counterfeiting my automated system of making deposits into my brokerage account. In the end, I stopped the automatic transfer to my brokerage account, thinking I would resume it as fast as this or that was done. The end result, I didn't make any new deposits for over a year. So I had to change something about this. What I did? I now make regular deposits of €110 each time when I get my paycheck. It is a lot less than the €500 deposits I was making before, but at least they stay in my account and they do get invested. The advantage of having a financial plan in place is that every time you get a windfall, you can immediately allocate that to the right place, be it paying off debt or making an extra investment. And that brings me to another point. Besides having a budget, you should also make an investment plan. It is too much to put every detail of an investment plan in this video, but I will highlight a few important points you need to consider. Determine your risk profile. How much risk can you realistically bear? What are your goals? Pure passive income, total growth, or something else? What is your current situation? Age, financial situation? I dabbled a bit into that topic in the episode where I talked about diversification, which is now recommended in the top right corner. Asset allocation. This is based on the aforementioned points, goals, risk, current situation. So how much of a percentage in stocks, bonds, cash and other asset classes. And then the portfolio beta, based on your risk profile. Other than that, you also need to write down your portfolio rules. How many stocks to own, across which sectors, when to buy, when to sell. I for one know that I'm quite risk tolerant. I've mentioned this a couple of times before, but I've been an online poker player for quite a while. The swings in poker are much worse than the swings in the stock market, so I know how I react to large swings in a portfolio. To find out your risk tolerance, ask yourself what would you do if the stock market drops another 20, 30 or even 50%? And please be honest, can you handle that? I plan to own 25 to 30 stocks in each sector across different industries in that sector. I buy dividend stocks with longer streaks of growing their dividends which meet my quality criteria. Rising revenue, net income, steady margins, sustainable modes, quality management, etc. All of which you can find in the playlist which is now suggested in the top right corner. Automating your finances is an important part of becoming successful long term. As I illustrated with my personal example before, it is important that you allocate a certain part to investing. Automate it by setting up an automatic transfer in your bank account as soon as your paycheck hits your account. Everything else you can add on top of that is a bonus. The worst enemy of the potential returns are your emotions, so take out as much emotion as you can. The advantage of having a plan is that you know what to do and where you want to go. How does this help you? I hope it inspires you to do the same. So set up your financial goals, make an investment plan, start and keep doing it consistently. Let me explain my future plans and then I will show you how you can start to set everything up as well. I made quite an aggressive plan where I would like to be able to retire on my passive income by the age of 40. I am now 34. I would like about 50k in annual passive income to be able to achieve that. It could very well be that I won't make that goal, but that is what I'm striving for. I laid out a plan on what I need to do in the coming years, which you can see here. I have a bit less than 10k invested into the stock market now and I plan on increasing the monthly deposits every time my income increases. I made an investment into a condo in the Philippines, which will be used for short-term rental through Airbnb. Other than that, I'm also actively working on increasing my income, by working hard at my regular day job, but also through the means of this YouTube channel. If I ever get monetized, that is. So how can you start? Well, first of all, like I said, get your personal finances in order, make a budget and monitor your income and expenses. Make an investment plan, write down your goals, risk tolerance, asset allocation, portfolio composition, which sectors and how many stocks, when to buy and when to sell. Automate your finances. Make an automatic deposit into your account each time you get paid. It does not matter how much you start with. Because of no-fee brokers and fractional shares, you can buy stocks for as little as $1. Learn. Learn how to analyze financial statements. Learn what makes a good business and what doesn't. If you don't know yet how to pick individual stocks, begin with investing in an ETF. Open up a brokerage account if you haven't done so already. Almost all US brokers are free. If you are in Europe, look into either the Giro or Trading 212. Do your research. Quality of the stock, how does it fit into your investment plan, etc. Buy the stock when you are satisfied with your findings and repeat until you have a complete portfolio. Keep increasing your income and watch your expenses. I hope this video helps you to start or continue your investment journey and that it inspires you to keep investing in dividend stocks. Once you have set up your plan, you are good to go. I have a playlist that walks you through all the steps to analyze dividend company. You can click on it in the bottom right corner. Let me know in the comments below what your future plans are so we can get there together. Also, don't forget to subscribe if you would like to stay updated on my future content. Until next time, bye bye.